Hi, we're going to walk through the exercise 3-7. Use the following adjusted trial balance of Wilson Trucking Company to prepare the income statement, statement of retained earnings, and a classified balance sheet. The retained earnings account balance is $155,000 at December 31st, 2014. So as you can see, we have our trial balance here in chart of account order, and we're going to prepare the financial statements. So typically the revenue and expenses are going to be listed at the end of the chart of accounts. So we're going to need those accounts first for the income statement. The income statement is the first statement that we prepare. It is for a period of time. You can see this one is for the year ended December 31st, 2015. So we begin with listing our revenue accounts. We have trucking fees earned here of $130,000. If we had more revenue accounts, we would of course list them. Then we're going to list our expense accounts. We have depreciation, salaries, office supplies, and repairs expense. So we're going to list those accounts. Then we're going to total up our expenses. To calculate net income, we're simply going to take revenue minus our expenses, and that's going to give us the net income for the year. For this example, $25,500. The second financial statement we prepare is the statement of retained earnings. It is also going to be for a period of time, either a month or a quarter. This one is for a year. And this one looks at our retained earnings. We have a beginning balance, plus we're going to add net income. We're going to subtract any dividends that we have, and we end up with our ending retained earnings. So it gives us the beginning retained earnings of $155,000. So that's what we're going to start this statement with. Next, we're going to add our net income. We get this from above from the income statement. And we end up with $180,500. Next, we're going to subtract our dividends. Again, those are going to be found from the trial balance. Here we have dividends of $20,000. And we end up with ending retained earnings for the year of $160,500. The third financial statement we're going to prepare is the balance sheet. This is the one that looks like the accounting equation. It lists the assets, it lists the liabilities, and it lists equity. The balance sheet is for a point in time. You can see it's for one date, December 31st. It's going to give the balances on that date, versus the other two gave the balances for the period. First, we start with our assets. So if we look at our chart of accounts, our trial balance, it's going to have our assets listed first. We have cash, accounts receivable, office supplies, and trucks. Those are all assets. We have our contra asset, accumulated depreciation, and we have land. So those are all going to go in the assets section. Notice accumulated depreciation is a credit, so it's going to be subtracted. So we have one current asset, that's cash. Then we list, these should be indented. Accounts receivable and office supplies are all current assets. Then we have our plant assets. The trucks less the accumulated depreciation gives us the book value for our trucks. We add land, and we end up with our total assets of $249,500. Next, we're going to list our liabilities. So we go back to the trial balance. We have accounts payable, we have interest payable, we have long-term notes payable. So we're going to prepare the liabilities section. Our current liabilities are accounts payable and interest payable. Current is they're due and payable within a year. We add our long-term notes payable, and we end up with our total liabilities. The last section is our equity section. Again, going back to the adjusted trial balance, we have common stock of $20,000. And for retained earnings, we're going to use the ending retained earnings from our statement of retained earnings. So we have common stock from the trial balance. Retained earnings, again, is the ending retained earnings from above. When we add that to our liabilities, we verify that the total assets equal the total liabilities plus equity. And that's the end of this problem.